To me, this is one of the great things about DeFi. If you look at the traditional financial business world, just in fees, they suck out somewhere like 6 to 8% of all global GDP goes to big investment global banks. That's insane in fees. I mean, that's like having a leech on your neck your whole life, just sucking your life force away, which is why I know that DeFi will be as big as it will be.
Welcome to BitBoy Crypto, home of the BitSquad, the largest crypto community in all the interwebs. My name is Ben. Every day on this channel, I show you how to make money in crypto. If you like money and crypto, make sure to hit that subscribe button. Today, we have a very special guest for you as I brought on Teeka Tiwari. You may know him from Palm Beach Confidential and his report, 5 coins to $5 million, that came out last year. A lot of people made a lot of money on those coins. He has an intense research group of over 160 people that helps him with these reports. You guys are going to find out more about those reports, but more importantly, we're going to find out what is going on with this market. Should you run or should you look at it as an opportunity? He's also going to be giving you what he believes to be the greatest opportunity to generate wealth in your lifetime, what that is and how you can be part of it. All right, let's go ahead and jump into the interview. Hey everybody, today I'm joined with a legend in crypto, Teeka Tiwari. You guys may know him from his website, palmbeachgroup.com, Palm Beach Confidential. Puts out incredible research. Great to have you on the channel. How are you doing today?
Thank you. It's wonderful to be here, and thanks for having me. It's a pleasure to be here.
Yeah, absolutely. And, you know, we were talking a little bit before we went on air. One of my first big videos on this channel was early last year, when I covered one of your reports, your 5 coins to 5 million. A lot of people were really excited about that. And by going through that process, like, I really learned, like, you've got some incredible research. And I've said that many times on my channel. And I just wanted to say, you know, hats off to you for building that team and putting that out there. But let's get to what's happening today and what's happening right now. The markets are very unsure. And you, as a guy who has been in crypto for a really long time, and of course, coming from traditional markets before that, just want to get your opinion on, like, what we're seeing right now, what people can expect, and why would people want to hold right now?
Ben, being in the market for so long, I take a lot of my knowledge for granted. So there are a lot of people that are in the space for the first time, and they're seeing negative news, and they lose their mind about it. They say, okay, you know, the king of Tesla is saying that Bitcoin was good. Now Bitcoin is bad. Now we get a news announcement today saying that China says banks must block crypto transactions. And of course, the market is falling. But the thing is, if you've been in crypto for a few years, you've seen that China has banned Bitcoin and Bitcoin miners and Bitcoin trading multiple times since 2013. I mean, more than 5. And every time the market freaks out. What I do know is that these Bitcoin miners in China, a lot of them have been forced to move. And it makes sense that some of them have got to sell and get some money in so they can move their miners into another country. So when you have all of that coming together, guess what happens? You have fear, sentiment collapses, and so does the price. And so what we're in right now is a mid-cycle bear correction in an ongoing bull trend. And I went through this multiple times in 2017. I saw GBTC, for instance, which is a trust that tracks the price of Bitcoin. I saw it go from $1 to $3 to $1.50 to $6 to 2 and change to 11 to 5.5 to 12 to 8 to 18, back to 12, and then all the way to 38. And that all happened in 1 year. In 1 year. And in that year, what happened? You had every central bank say that Bitcoin was the devil and was the end, and it was only being used for crime. You had Jamie Dimon, the most powerful banker in the world, call it a tulip craze, a bubble, saying that he would fire anybody who would get involved. We had China ban all trading. All trading was banned. They went after the miners. You had the central bank in Russia come out and say, we're never going to allow crypto trading. India banned crypto trading. So again and again and again, you have these assaults against this asset. Now ask yourself, I've been involved professionally in the stock market and in finance since 1989.
Wow. I was in kindergarten.
I have never in my career seen any asset be the product of such a orchestrated attack by traditional gatekeepers ever. I've never seen gold get attacked like that. I've never seen silver get attacked like that. I've never seen exotic options like credit default swaps. Even in the depths of the financial crisis, people didn't come out and say, we're defunding anything to do with credit default swaps and you can never trade a credit default swap again. And they crashed the entire global economy. So there's a couple of things that we need to take away from that. So one is Bitcoin has still managed to thrive in the face of more regulatory pressures and external pressures than any other asset class I have ever seen in the history of my 30-year career. Period. And the fact that it's continued to thrive in the face of that says a lot about this asset. Two, you've gone from a guy like Jamie Dimon saying that this asset has no value to now his firm is offering Bitcoin as an investable asset to his end users. Think about that. Yeah. Think about how far we've come. You've got Goldman Sachs doing the same, Morgan Stanley doing the same, Citigroup doing the same. So why is this important? What everybody needs to understand is that the way that the incentives of Bitcoin are created is that the network protects itself. And now that you have JP Morgan, Citibank, Morgan Stanley, the OCC all on Bitcoin's side, guess what? You now have all those lawyers on Bitcoin's side. You now have all that lobbying on Bitcoin's side. So you can hate on the central bank. You can hate on the big banks all you want, but they see the money to be made in Bitcoin. And so they're going to defend the network. Do you really think that Goldman Sachs is going to set up a trading desk and Morgan Stanley is going to recommend their clients buy Bitcoin? And they're going to let any American regulatory agency cut off funding to Bitcoin? There's no way, right? We've crossed the Rubicon. So if anybody is there sitting and they're thinking, oh my good Lord, this thing's down 50%, I got to get out now before they make this illegal. In 2017, I would say that was a rational train of thought to have. In 2016, that was a rational train of thought to have. Heck, even until 2019, that was rational. But now, in 2021, where we are now with the institutional rails that have already been built, created, and approved by all the regulatory agencies in the United States, it's no longer rational to think like that. It's irrational to think that anybody is going to make an asset illegal that the world's biggest banks are now participating in.
Yeah, but like you said, I mean, I think there's a lot of orchestration going on, and there's a lot of manipulation to the downside. And I would say the central banks are involved in that because they have a longer time frame than we do. People in my chat, like, they have a time frame of like, oh crap, I've lost money in the last week. They have a time frame of, okay, where are we going to be at in 2030, 2040, 2050? And they can play the long game, and they're trying to push out the people playing the short game. If you're playing the short game, they want to inflict pain on you so you get out and they win in the long term. And I think that that's something that's really unfortunate. I think what we're seeing is they're realizing that, yes, they got the lawyers on their side. They've got the regulators on their side. They've got a lot of stuff on their side. They're realizing the only true way that they can affect Bitcoin is to own it. And that's why we see them buying so much. And I would say with trading desks where they're taking in trading fees, that's another way for them to be making, more money in Bitcoin. But I mean, you have to think that in the future, like the central bankers do see the writing on the wall with this, though, right? That eventually this decentralized finance is going to flip traditional finance, up on its head. And yes, like Bitcoin isn't technically DeFi, but it's leading the charge, and Ethereum's right there behind it. I know you're a big proponent of DeFi. Like, where do you think this goes, like with decentralized finance against the traditional banking system?
So again, what I would say, Ben, is you have to look at incentives. Everything around big money is driven by math. So if it costs if the global settlement cost for transactions between big banks and brokers is $20 billion a year, meaning you're bank A, I'm bank B, we want to buy and sell a security. So that cost of settling those transactions, of figuring out that you actually have the security, I actually have the money, that's a $20 billion friction. So DeFi takes that down to virtually zero, right? When you move that all to a blockchain. So if we're on an interbank network and all of our assets are on a blockchain, including your capital in the form of stable coins and my stock, you can tell that I own the stock because the blockchain can't be hacked. I can tell you have the money because the blockchain can't be hacked, which means that we can do instantaneous settlement. It means that we can drive our fees literally down to zero, a fraction of a penny. So if you follow that economic incentive to its logical conclusion, it tells you that this has to be the future. Anytime you can take a high friction series of events and reduce the friction down to virtually zero, the world's going to flock to it purely based on their own self-interest, not because they think the blockchain is the second coming of freedom, which it is, right, but they're just seeing the dollars. They're like, oh my God, we can save $20 billion in global settlement costs each year. Done.
Yeah, and I think that, once again, it always gets back to money, especially with the big money. With the smart money, it always comes back to money. The idealistic stuff, the, philosophical standpoints that a lot of us have about blockchain, like, we believe that stuff, but at the end of the day, money is certainly gonna drive all this. And I think that we were talking before we went on air once again, and you're involved with a company called Defi.tech. What's your role there, and or what's your investment in it, or whatever, and how do you see that helping people that are interested in DeFi?
Yeah, so just to be very clear, I do have an investment in Defi.tech. I'm an investor and an advisor. So anything I say about them is going to be considered bias. So please keep that in mind. So what I've seen over the years is that value aggregates around people that make it easier to get access to crypto assets, right? If you look at Coinbase, if you look at Kraken, if you look at any of Gemini, enormous value has aggregated to these companies because they make it easier for the everyday person to get exposure to these assets. I'm of the belief that decentralized finance, that trend is, in my opinion, the biggest wealth creating trend that I've ever discovered in my entire life. Because if you look at traditional finance, Ben, it hasn't really been disrupted. They're still using the same technology from 67, from 1960, 1970, all those old machines that are running Fortran, COBOL, Pascal. Anybody that's my age will know what those words are, right? These ancient machine code languages, they're using an ancient series of tech in order to do all this plumbing. Well, decentralized finance comes in there and it fixes all of that. And so when I was approached by Defi.tech, I loved what they were doing. They were making this space more accessible to the everyday person. And they do it by creating products that have zero fees that allow you to get access to DeFi protocols. So everything from Ethereum to Cardano and Polkadot and even Bitcoin, they're creating these exchange traded products that allow people easy access to buy and sell them the way that 500 million people are used to buying and selling investments through their brokerage account. And I think that's the future. If you have to enable average everyday people to buy into this market in a way that's comfortable with them. Because I'll tell you right now, 500 million people are not going to spin up a Bitcoin wallet and go buy Bitcoin. They're not going to spin up a Uniswap wallet or a MyEther wallet and go trade and swap on Uniswap. It's just not going to happen. The learning curve is too steep.
Yeah.
So in order for this to hit mainstream, you are going to need people to help facilitate that. And that's what Defi.tech is doing.
Yeah. And I think I kind of want to go back again to my previous question, kind of regarding the central banks and DeFi, because what you're saying makes a lot of sense. I agree with you 100%. Like, you think about the learning curve to get a MetaMask wallet and go, swap something on Binance Smart Chain through MetaMask. It's incredibly high. Like, even sometimes I'm sitting there like, how do I even do this? So I know for the average beginner, like, they're not going to have a clue on some of that stuff. But as a company like Defi.tech and other things that are in the, not just DeFi space, but the crypto space in general, is they continue to make this stuff easier and easier and easier for the average person to get in. And it's all decentralized and it's done cheap and there's no middleman. Where does that put JP Morgan? Where does that put some of the Goldman Sachs, where does that put them in the future, 25, 30 years down the road, when we don't need them to do these things? We can do it ourselves. Like, don't you think at some point, though, that it becomes where we actually don't need those companies? And are they kind of ensuring their own demise by getting involved in all this?
I think you hit the nail on the head when you said 25 to 30 years.
Yeah.
It would be a slow rot. I mean, there's enormous demand for the core services that these big banks offer. Right? If you're doing multi-billion-dollar underwriting types of business, you're not going to do that in a decentralized way, not yet, because the infrastructure isn't there. What I will say about Jamie Dimon is he said that we should be scared. His quote, "shitless," by these fintechs, and he's absolutely right. He knows that he's got to start embracing some of these changes if his company will last beyond his lifetime. I mean, Goldman Sachs and JP Morgan and Citibank, they're not going anywhere over the next 10 or 20 years. Right. But here's the way that disruptive tech works. You're in business, you're in business, you're in business, you're in business, you're out of business.
Yep.
That's how, just ask Blockbuster, just ask Woolworths, just ask Kmart, just ask any of these companies that just had these incredible franchises for so long. And then there's this tipping point, and then they're done.
Yeah.
So to me, this is one of the great things about DeFi. If you look at the traditional financial business world, just in fees, they suck out somewhere like 6 to 8% of all global GDP goes to big investment global banks. That's insane in fees. I mean, that's like having a leech on your neck your whole life, just sucking your life force away, which is why I know that DeFi will be as big as it will be, because the margins there are just so huge, and they're just waiting to collapse.
Yeah, and people can fault Generation Z for all kinds of things, but they're smarter than this on a lot of stuff. They're not going to accept fees. I've always compared the internet to the printing press. I mean, and now all the information is out there about how these banks work and about how these fees work, and there's ways around stuff. And all this is at the fingertips of the next generation, and this current system is not going to continue to work. And DeFi, I've said for a long time, it's like the automobile versus the horse and buggy. There is you can push it off for as long as you can try to push it off for, but it's coming. It's better technology. It's going to make things easier, and it's going to be very fun to watch when that happens. But Jamie Dimon, okay, he's 65 years old. Lloyd Blankfein, chairman of Goldman Sachs, he's 66 years old. Some more investment bankers: Charles Scarf, 56 years; Brian Moynihan, 61 years. Here's the thing. A lot of these people that are leading a lot of these top companies and these top funds, like 25 years from now, they may be in a nursing home. Right. They may not actually see the ouster of their businesses. And so I think a lot of what you're saying makes sense. In the short term, they're probably pushing their companies to get as much money as they can in the short term, because over the long term, like, this is just obviously where things are going. And a lot of your research is top notch. PalmBeachGroup.com is your website. But I just want to kind of allow you to talk a little bit about your research and Palm Beach Confidential, because I've seen the reports and they're phenomenal. I know, you were telling me how many researchers you had. I mean, that's when we've got like 10 researchers, and we feel like we're, just have absolutely riches, an embarrassment of riches in research. But compared to you, we basically don't have nearly that much. Can you just talk a little bit about the research group and kind of the advantage for people to see these reports, because they are absolutely phenomenal, very in-depth, great perspective. I just kind of want to talk about that for a second.
Yeah, absolutely. So we have about 160 employees in our company. It's a large publishing company, and the key thing that I want everybody to remember about Palm Beach Research Group is that we only have one avenue for how we make profit, and that is our subscription cost. That's it. We don't sell our lists. We don't rent our lists. We don't even sell any advertising to our lists. And we never own anything that we recommend. There's only 2 coins that I'm allowed to own that we've recommended. One is Bitcoin and the other is Ethereum, because if you can't own Bitcoin and Ethereum, you can't operate in this space at all. So it's really important that I want everybody to understand that we don't have any conflicts of interest. So if I recommend something and it shoots up, I'm not the beneficiary of that. My readers are the beneficiary of that. And so this is something that was critically important. We wanted to always have in place, because you know as well as I do, when you have a large audience, if you like something, it can have an impact on it. And the world thinks that you're there promoting it specifically for yourself.
Yeah.
But I need to tell everybody that's just not the case. That's just not the way we operate. We have a large publishing business that employs a lot of people, and our business is publishing and selling newsletters for a premium. We sell them for a premium. To create that level of research, to find those ideas, to research to that degree, I need a big staff, and those people have to get paid.
Yeah, and it shows. Like I said, the research is top notch. And one thing I've said on videos where I've discussed some of your reports, public domain stuff, is that look, if somebody's got $200 invested in the market, it's probably not a good idea to sign up for a newsletter that's thousands of dollars. But if you're a person who has a serious investment portfolio and you're serious about making money in crypto, and you can afford that into your budget, you will probably make that money back several times over, even in just the the year and a half during the cycle that we're in a real true or bull market. Because I mean, if you go back and look at a lot of the coins that we covered from your, 5 coins to 5 million list, whether it was, I think you had MCO, didn't you? Do you have CRO or MCO? I can't remember which one it was, but Numeraire was one. I know that kind of came out of nowhere, and that one has absolutely crushed it. There's a lot of picks that you've had on there that have done so well in the last year that research, definitely pays off. So, well, is there anything else that, anything to kind of end here that, you think is important for people to know about you or your business or crypto? Just a final thought.
Well, I would talk about crypto in general. I would say, look, when you wake up and you see Bitcoin down 50% or you see it down 8% like today, it's normal to want to vomit. It's normal to think, why am I doing this to myself? Why am I putting myself through this? What I would say to you is this: be rational, don't use leverage, put your position on, and just forget about it. Think in 3, 4, and 5 year timeframes. Think about this: how many assets exist where you can buy them at their peak, they can drop 85%, and 4 years later, you've doubled your money?
Yeah.
That asset doesn't exist outside of Bitcoin. It doesn't exist. So I know it's easy to beat yourself up and think, oh my God, I bought Bitcoin at 55K, or I bought Bitcoin at 65K. Now it's trading at 32. I'm an idiot. You're not. You're not. I want you to think about the people that bought Bitcoin at 1,400. It then dropped to 175. They beat themselves up so much, they sold it there, and then they watched it go to 20K. And then you had the person that bought it at 20K, watched it go down to 3,500, beat themselves up the whole way down, sold it at 3,500, and then they watched it go to 64,000.
Yeah.
Now we're in that next cycle. Somebody bought it at 64,000. It's now at 32,000. You're beating yourself up. You're thinking, I should sell. I would tell you, don't beat yourself up.
Yeah.
This is the asset. The asset can drop 50, 60% like that. Just leave it alone. Live your life. Enjoy your life. And I believe that this asset, Bitcoin, will transform your life in a way that no other asset can, whether it's in the stock market, commodities, gold, private shares, public shares. I don't care what it is. There is no asset in the world that can transform your life like Bitcoin can. All you got to do is just hold it. That's it.
Yeah. And there's certainly people out there that, they like to trade, and, we support those people. But the message I've been giving on my channel: if you have a trading portfolio, that's great. Do your thing there. But when it comes to really changing your life, don't sell your Bitcoin. Don't sell your Ethereum. It's that easy. All of the manipulation that goes on out there, you bypass all of it when you just buy those two things and you'll hold them. And so I really agree with you. I love that message. Well, Teeka, it's been so great having you on the show today. Look forward to having you back on in the future. And if everybody wants to go check out his stuff, you can go to palmbeachgroup.com. And guys, let me know down below in the comments what you guys think. Do you guys think DeFi is the most disruptive thing in crypto? Do you think this is one of the greatest wealth generating niches in history? I know I certainly do. I know Teeka does. So drop those comments down below. That's all I got for you today. Be blessed. Way out.